finance people were known to deal with the just maybe reporting and cash flow issues, the balance sheet and all that.
Okay.
Now, finance people are influencers.
Yes.
Yes.
And it's not the usual influencers on TikTok.
Exactly. Okay. Given the space where we sit as finance people, and particularly CFOs, we have some kind of helicopter view. You see the way an helicopter operates, and you can see the entire view.
Yeah.
So we have that advantage. All operations terminate at finance in form of a report or something else, or in terms of a payment or a funding or that.
Yeah.
So meaning when you are sitting at that vantage point, you have a lot of influence.
Hi, everyone. Welcome back to another episode of the Good Business Africa podcast, a platform that is specifically designed to have conversations around what it means to be a good business, and not just a good business, but a good business in Africa, because we believe that Africa is our business. And today we're going to be having a very interesting conversation with a specific focus on the role of insurance and even finance in the insurance industry and what it does to the everyday person. You know, there's a common joke that people say that if you don't want to buy insurance, don't give an insurance person your phone number. But again, I'm here with the CFO himself from AAR. Maybe just introduce yourself.
Thank you so much, Sebastian. My name is Hosea Kiprop. I'm privileged to serve as the CFO of AAR Insurance Group.
Okay.
Yeah, so AAR Insurance is a regional insurer, and we distribute general insurance products, medical, and other classes of business. So I'm really excited to be part of this interview today.
Yeah. The backbone of this conversation is from the Kenya ESG Awards, where AAR emerged as was recognized as the #1 sustainable economic development company. And I'm just trying to understand how that ties into the broader vision of AAR and the operations.
Yeah, thank you very much. We were excited to be recognized for our efforts. As at AAR Insurance, we've done a lot around sustainability. It has been a journey which has started now close to 3-4 years. Where we crafted a ESG strategy, which was approved from all levels, particularly from the top. You know, for sustainability to work and for your strategy to work, it has to be supported from the top.
Yes.
It's actually driven from a board level. And I'm happy at AAR. I'm the one now leading the sustainability initiative. It sits within my office. And so we've in our strategy, we focus on the 3 pillars of ESG, environment, social, and governance. So maybe around environment, what we've done is we recently launched an initiative called a Tree Alive campaign, where for every life we onboard in our business, we plant a tree.
So these are employees, whoever it is that you're
our clients generally. So whenever we sell a policy, and we onboard new lives. In insurance, we maybe just to give you some perspective. At AAR Insurance, we serve about 250,000 customers, more than 250,000 customers. So every time we onboard a new customer, a new policyholder, we plant a tree.
Nice.
For that. And this is goes a long way to reduce the carbon footprint. And maybe just to give you some perspective, last year we planted 40,000 trees in different parts of the country. And also we did this also in Uganda, where we also have an operation. It was a very successful campaign. This year our strategy is to plant about 60,000 trees. Now just around the ESG, the E pillar of environment. And also something else we've done, which resonates very well with our customers and has had a lot of impact in our business, is around digitization. So we've digitized all our operations. So just to reduce paper. So just imagine the way when you use paper, the amount of trees you cut. So for us, not only has it addressed the environment, but also what it has done, it has made access to our products and services quite easy, because just at the palm of your hand, using your mobile phone, you can log in and interact with us, buy our policy. If there's an issue to be addressed, you can use your phone to
this
interact with us.
Customers first kind of perspective.
So, yes. Then, so our approach to ESG is to integrate it with our business, not only to be, in quotes, politically correct, but just to integrate it and make that impact to the day-to-day life of a person. And the other thing, initiative we are doing around the S is we've come up with several products. I'll just mention a key one, which is actually ongoing, and we believe it will have a lot of impact. There's a product we've designed called Mom Care, in partnership with the Farm Access. So the whole essence of this product is to address mortality rates. I'm sure you've been watching news and reading about abandoned babies.
Yes.
Young mothers who are unable to raise babies. You've seen there've been cases of either fetuses thrown in.
I spent a lot of time on TikTok. The other day I saw some lady picked a newborn who had just been abandoned by their gate, I think.
Yes.
And now she's going through the process of incorporating the baby in her own family.
So as part of being responsible to the society, what we've done is the way this product works is even as you, Sebastian, if you know a girl out there who maybe they say life happens, they find themselves expectant.
But they don't have the resources to support.
Buy a policy for that unborn child. Yes, so that now when that child is born, you see the mother is guaranteed, assuming it's a school-going girl, they can still go to school. The child can be, they can go through the entire pregnancy process, even including childbirth. And there's a policy, all the costs are taken care of, and they can access quality healthcare.
Also, the policy is for health.
It's
especially
for
the mother and the child.
For the child, yes. Okay. So we allow you, anybody, to buy for a vulnerable individual out there. Yes.
Okay.
Yeah. So that resonates with the just ensuring the economic sustainability, because we are addressing societal problems.
Yes.
If we empower this girl to go back to school, just imagine what they will be in future and how they will contribute to the economy. Yeah,
because I think even the dark cloud that surrounds early pregnancy or unplanned pregnancy is usually who's going to take care of this kid.
Yes.
And so I think this addresses that angle of it.
Then the other one is on governance. Governance to us is a key pillar. I've already mentioned that it's being driven at the highest level. So we need to ensure that as we operate, we have good governance to ensure sustainability of the business. We want AAR to be there for the long term.
Even how long has it been there for?
We've now been, last year we celebrated our 40th anniversary, which was a very exciting milestone for us. We've been around for 40 years. It's not something...
40 years is a long time.
It's a long time.
Especially in the industry.
Exactly.
We've seen a number of insurance companies come in, fold. But for 40 years is very impressive.
So that means governance is quite key in that process, ensuring that there's a separation between what the board can do, what management can do. Most companies, some of the challenges are where there are poor governance frameworks. That's what leads to either financial loss or maybe wrong decisions being made. So
from a governance perspective, just to kind of chime in, so we are talking about employees, we're talking about your own suppliers, we're talking about your team, even your customers. Maybe you can give us an example of something you're doing, say, to protect the AAR employee.
One of the things we've done, maybe just to protect our employees, we are very big in training our employees. We believe if we empower employees and we train them, we make sure they have the right certification, the right qualification to serve our clients. Not only we are growing the business, but also we are creating ambassadors. Even in the event that someone leaves the organization, they become our good ambassadors.
They're going to be like, I left, but this guy has treated me well.
Yes. So the other thing is our intermediaries, which are very important in insurance. Meaning our brokers, our agents, supporting them. And we also support them in terms of training. Whenever there are changes in regulations, training them on our products, training them on how to treat customers fairly. Treating customers fairly is one of the biggest and most important thing to do. Because your customer needs to feel they've been treated fairly, they've been served.
Yeah.
They are, one of the challenges is insurance is we've seen some customers out there complaining about insurance policies, that they are small prints, which they don't understand what it means.
Yes, hidden information in the contracts.
Yes. So we try to simplify, so that even when you are buying our product, you actually understand your rights, you understand what the product entails. So that now at the point when you have a claim, you clearly understand.
Kind of matching the promise to the delivery. Okay. So as the CFO, I know in most cases when guys are complaining about companies, it goes back to the person controlling the finances. If this company is not doing this because the person controlling the finances now, like the chief financial officer, you like the stones are going to be thrown at you. But now to be at a position where you're actually being recognized for the work you're doing, what does that mean for you individually and even for the company?
It's a very exciting moment, and it reflects the work we've done collectively as a team. I have a very good team in finance. I'm privileged, very good colleagues which we work with.
Okay.
And one of the philosophies, what we've done is to ensure that everybody is empowered to do their work. It's not a one-man show. I just represent our collective efforts, what we've done.
Okay.
But maybe just to mention, one of the key things as a chief finance officer is to ensure that sustainability is embedded in our strategy, the company strategy.
Okay.
That means it becomes the core of what we do. Like
operations.
For instance, even in product development, ensuring even in our investments. In insurance, we do a lot of investments, ensuring that we invest in the right places, green investments. What does our investments do? Even the way we onboard our suppliers, we try to ensure that also those suppliers we onboard or our providers, our service providers are also responsible, responsible corporate citizens, and they make impact to the society. And one of the things we've introduced recently is to just try to reward our clients, especially those who are embrace sustainability in what they do. They have good corporate practices. They are responsible to the environment. So we give them. We've designed products where we also give them discounts. For just as a reward. For being
to encourage good behavior, for lack of a better way of putting it.
Exactly. And by the way, we see there's some payback. Because the more you deal with the socially corporate citizens who embrace sustainability as a way of life, what they do, it pays back.
Yes, it's an investment.
Yes, because you kind of attract more customers. Even our own. Whenever we are looking at raising capital, you can attract investors to bring in more capital to the business, and you enhance transparency in the way you do operations. Generally in the country, we all complain about transparency in the way things are done.
That's very true.
So for corporate organization, transparency is quite key.
That actually answers the next question I had, which was, how do you make sure that the strategies that you have as the CFO, the responsibility that you have as the CFO, like making sure that, yes, we are talking about sustainability, but how do we ingrain it in our day-to-day operations? And saying, like, you're looking at even the suppliers and the people that you're working with that you don't necessarily have control, and figuring out a way to make sure that, since we don't have control, we're going to figure out a way to make you intuitively practice good business. When you look at the return, the financial return, or even the public overview return for these strategies, what would you say that is?
One of the key stakeholders which are forgotten in all this debate about sustainability is actually the shareholder. So the reason why I'm talking about the shareholder, remember, this is the person who has put in their money in the business, and they expect a return at the end of the day. So to the shareholder, the role of the CFO is to ensure in all what we do, sustainability or ESG does not become a cost
Yes.
Yeah.
An investment.
It's like an investment in the business.
Yeah.
Because if we embrace things like good corporate governance, it pays back. It means we have zero tolerance to corruption.
Yeah.
We have we ensure that fair business practices, even in assuming we were to float a tender for some services today.
Yes.
Anybody out there will have a fair chance of getting that tender. And that really creates a lot of trust in our suppliers, in all our stakeholders, that you are dealing with a very transparent corporate citizen, whom you can do business with. And then the other thing is keeping our word and our promise. So what does this mean? For instance, if we say we'll pay you a claim within 48 hours, we actually pay you a claim within that 48 hours. We keep our promise.
Okay.
Yeah. So if we say we are paying our suppliers within a period of 15 days, we actually deliver our word. And what does that do? Remember, as an insurance company, we rely on service providers to service our clients.
Yes.
So if we treat our service provider well, that treatment will trickle back to the client.
Yes.
And then that client will have even more confidence in dealing with us.
Yes.
And but then, Sebastian, to just surprise you, when we were celebrating our 40th anniversary, we've had clients who've been with us for the entire 40 years journey.
What?
Consistently, they've renewed their policies faithfully for 40 years. And it's not one client, a number of clients. And that really, it was an humbling experience because that reflects the amount of trust our clients have in us. And that means in our entire ecosystem, it does not only take AAR alone. We have to influence what happens downstream.
The brokers, the agents, even your suppliers.
Employees, suppliers.
Okay, because I think what most businesses struggle with is the balance between stakeholder value and shareholder value. Most of them will go to please the shareholder and then forget about the customers and the other people that make the business work. And then the other guys will focus more on the customers and then now infuse unacceptable or non-good business practices that then affects the business. If you look at it from that perspective, I know you shared the different initiatives that you have. What would you say that from a financial standpoint, how does that affect how you operate? So you have this project where I can come and buy insurance for this financially challenged person or someone who's at a disadvantage. How does that reflect back to the business? Of course, by buying the policy, there's an advantage. But even from a social investment perspective, how does that affect your operations?
The impact is actually quite good. I'll just give you an example. Last year, we launched a product called Shwari. That now, in this product, it has no limit. You remember, part of the issues in medical health insurance is the older you grow, the more risky you become. So that's the perception in the insurance space. And but then there are some statistics and some which support that, but it's now changing a bit. So in our product, this is a product which has no age limit. So
regardless of
even if
your age, if you're 60 or 40 or 30 years, you're still going to pay the same.
You can still buy a policy. These are people who were excluded before. In most insurance policies, particularly for health, the maximum age limit used to be about 60 years. But now, with the advancement of technology and people are now more health conscious, we've realized even the older citizens are now very responsible, especially around their health. So people are very cautious about what they eat.
Actually more conscious compared to younger people.
So these are people who are previously excluded. They are now included in insurance. And it goes a long way in addressing insurance penetration.
So the Shwari product is available to the older generation or everyone?
Everyone.
Okay, and the amount is the same, the benefits are the same?
Yes, meaning everybody can buy, and you can buy whatever limit you want.
My question is, if someone who's younger, will they still pay the same amount as the person who's older, and will they still get the same benefits? Or it varies based on how old you are?
Now we've reduced that gap between the way we are pricing. So we are no longer really pricing about age. But we're just trying to introduce a product which is all inclusive. And the impact that has done is that this has become one of the most successful products we've launched. It's actually quite profitable. And many people are quite happy. It has raised really our profile.
Because I would imagine if someone has been financially responsible for the better part of their life, when they're hitting 60, which was the cutoff age, they're actually now more financially secure.
Exactly.
And now they are finding this product that was not available to them. So they have the purchasing power even. And maybe even have people who can buy it for them. Now you're seeing younger generations taking insurance up for their families and their people who are older. They are older dependents as opposed to the younger dependents. So from an economic perspective and sustainable economic development perspective, how do you consciously make decisions to partner with governments and even other private entities?
We've embedded this in our strategy.
In a way that doesn't affect your operations.
Exactly. And in a way, our approach is to ensure that we approach sustainability in a way that it is sustainable. We can fund it. We can actually fund it. And my role as the CFO is also, even where there are some funding gaps, is to look for funding and partners to partner with. Like, for instance, I'll give you an example of Home Care, which we are partnering with an organization called Farm Access. And to look for such kind of partners. And at the moment, we are working on another product, not really a product, but a solution. One of the biggest challenges to access of insurance is insurance is deemed to be an expensive product. It involves a lot of cost outlay. So the main challenge is actually financing. So if you go to a bank, for instance, for the bank to finance your insurance product, you'll find that you'll pay a very high interest, about 4.5% a month. So that discourages. If you do that in a year, it's close to 50%.
Which is quite expensive.
So imagine if you are an SME, you are someone who has a small business out there. So can you really afford
50% is too much.
You can't afford, So we are looking at alternative ways of ensuring that we finance some of our customers, especially retail clients and small businesses, to access insurance by partnering with some. We are now thinking of creating a microfinance, so that we can partner with some investors and see whether we can give insurance financing.
Fill that gap.
At a lower cost,
Because I see banks do that. Banks now are curating insurance products. So now you guys are reversing that.
The only thing we are trying to address is the cost. The solutions are there, but the cost is it's actually quite expensive. So to give you some perspective, the insurance penetration currently is below 3%, it's actually about 2.4%.
In Kenya, or in the other regions where you're at?
Which is quite low compared to the global average of 7%. So as part of our sustainability initiatives is to address that challenge, which we've identified. One of them is the cost, which I've mentioned, because of the low purchasing power. The other one is the perception of insurance. That's actually not a need. Someone will say, insurance basically is about managing risks. So someone will say, let me just wait until it happens, and then we cross the bridge when we get there. But just imagine from even the recent examples in during the Gen Z demonstrations, the protest. You've seen a lot of businesses go down, small businesses. We've seen images of some business people actually crying, shedding tears.
Even individuals losing their lives. What would you say? And I know this is away from what we had planned to talk about, but what would you say is the reason why as Kenyans have that mindset of we'll deal with it when it happens? And we're not very proactive when it comes to protecting what is ours.
The main challenge is actually the low the low incomes. I think most Kenyans live below the poverty line.
Okay.
So now insurance will not rank at the top of your needs. People are still taking care of their basic needs, which is food, clothing.
The hierarchy of needs has a lot of things stacked at the top.
Yeah, so that's the main challenge in our economy.
Okay.
Yeah, so even as corporate citizens, there's a lot we can do to ensure that the economy grows.
Yeah.
We create inclusion for everybody to grow.
Okay.
So the way the economy currently structured, I think it's kind of discriminates against the people at the lower pyramid.
Yeah.
Yeah. So some of these solutions we are trying to do is to address that gap and ensure that we support even the people at the bottom to grow.
Okay.
Yeah.
From my naivety perspective, I assume if you are a CFO in the insurance industry, you can be a CFO in banking, you can be a CFO in agriculture, you can in whatever industry. Is that true?
It's not true. I'll just give you my background.
Okay.
I was actually working in the aviation industry. I've worked in 3 industries, 3 or 4.
Okay.
So I've worked in the banking industry.
Mm-hmm.
I've had the privilege of working at the aviation industry.
Okay.
That's specifically Kenya Airways.
Okay.
Yes.
So these at the same level, CFO or just finance?
Yes, just finance. Just like there, I was a finance manager.
Okay.
Yeah.
So to piggyback on that, what then would you say is the role of finance in championing for sustainable sustainable economic development?
No, the role of finance has actually changed.
Okay.
Finance people were known to deal with the just maybe reporting and cash flow issues, the balance sheet and all that.
Okay.
Now, finance people are influencers.
Yes.
Yes.
And it's not the usual influencers on TikTok.
Exactly. Given the space where we sit as finance people, and particularly CFOs, we have some kind of helicopter view. You see the way an helicopter operates, and you can see the entire view.
Yeah.
So we have that advantage. All operations terminate at finance in form of a report or something else, or in terms of a payment or a funding or that.
Yeah.
So meaning when you are sitting at that vantage point, you have a lot of influence. To influence even operations.
Yeah.
To influence, you also have interactions with the shareholders, stakeholder management, to influence their thinking, to make sure that even whatever reports are presented to the board have impact. It has exactly. You look at it from a global view as opposed to a narrow view.
Yeah.
Yeah. So the biggest role now for finance people is to be influencers and advocates. That's why finance people and particularly the CFOs should be at the center of operations.
Yeah.
You need to be where the action is.
Okay.
For instance, at AAR, whenever we are whatever is happening at the distribution point, what the salespeople are doing, finance should be there to see what's happening.
Yeah.
So that even by the time someone is coming up with a proposal that will need a certain funding, you have an understanding of what that entails.
Yeah.
I'll even take you back to the aviation industry.
Okay.
I'll just give you a very interesting scenario.
Okay.
You know, even the way a plane flies, the way the pilot flies the plane, it has a lot of impact on the cost.
Oh, yeah. Based on the route they're taking?
The route, even the behavior of the pilot.
Oh, okay.
I'm sure you've flown where you've discovered that when a pilot is landing, there's one who can do some very aggressive landing.
Yes.
Just land suddenly and then they break.
Yeah.
So the amount of fuel which is spent there is a lot. Yeah. And this has an impact on the environment. Even the wear and tear of the brakes.
Even the finance perspective, because now they have to replace a couple of things.
Yes. Yeah. So that's the reason why the finance person should understand all that. Then now, as you allocate resources, you can even now give KPIs to tell that pilot, but the saving of fuel we expect from you when you're flying is this much. So you need to measure at that level, tracking the KPIs.
So now that would mean you have to actually be there and see how they're flying the plane and their behavior. Okay.
And you know that what that will do? It will actually influence the behavior of that pilot. Yes. So similarly, in insurance, the same thing.
Yeah.
The way a product is designed, you need to understand how the target market, how the product is designed, the cost, what impact would it have on the environment, and all that. How will it be distributed? So why distribution is important? Is it inclusive? Or what I mean is it only restricted to a few people to sell this product? Or for instance, is it open to many people to sell it? When it's open to many people, just imagine the economic impact you are creating in the lives of those people.
Yes. Yeah. So those people are relevant to the business.
Exactly.
You get a win-win scenario.
Yes, yeah.
Because I think the number one question that everyone who is in business or has been in business asks is, does it make financial sense?
Yes, yeah.
I think that's a good point to end this conversation.
And maybe just to add something to what you've just said about making financial sense.
Yeah.
Now, the CFO also is required to go beyond making financial sense.
Okay.
To see the wider big picture. There's something which may not make some financial sense at the moment.
Yeah.
But maybe it's an investment.
Or it will make in a couple of years.
Exactly. Yeah. Maybe another 2-3 years.
Yeah.
Or alternatively, or maybe it will have some other wider impact. Like even creating an economic, it's creating some economic impact.
Yeah. Social and economic impact to the shareholders and the stakeholders.
Yes. Yeah.
Okay.
Yeah.
Okay. And so now, how do you...
can I give you just an example of that, of what we've done as AAR?
Yeah.
You remember, if you look at the history of AAR, we started as a health management organization.
Okay.
Then at some point, we also invested in hospitals.
Mm-hmm.
So we are very proud. We have a hospital called AAR Hospital.
The one on Kiambu Road.
On Kiambu Road, yes. Yeah. That's almost like a social investment. It will not have the immediate... return.
Like immediately you'll be like, hey, this is an expensive venture.
Yes.
But in the long term...
Exactly. And also just imagine the impact it creates in terms of access to healthcare.
Yeah.
Yeah.
If you look at it from that angle, yes, it's going to make profit for the business. But now even where you've built it, you've allowed other businesses to exist in that ecosystem. You've built employment for people who are coming from school, nursing school or medicine school.
Yeah.
So the long-term effect is huge.
Yeah.
So when you look at the financial sense, we need to look beyond now.
Exactly.
And be like, okay, in 50 years, now that you've turned 40, what will be our story at that point?
Yeah.
Okay.
Yes. Another impact, just from an economic perspective, is... as AAR Insurance, we've invested a lot in supporting SMEs and MSMEs.
Okay.
We recently had a conference at the beginning of this year.
Okay.
And the theme was about SMEs, empowering small businesses. These are businesses run maybe by 3 people, one person.
Yeah.
Yeah. Just empowering them on how to ensure the long-term sustainability of business. So remember, one of the biggest challenges in Kenya is that statistics show that if you start 10 businesses this year,
8
maybe
will
about
fold.
Exactly.
That's true. That is true.
So we also have a responsibility, sharing our experience of how we run a corporate, and if some of those practices can also be inculcated in those small businesses, so that they are there for the long term. And not only that addresses an economic problem, but even we are creating more customers for ourselves. And now the more that a shareholder we'll also get more returns on it. So it's a win-win situation for everybody.
Yeah. Actually, people say customers will come back if they're getting value from you.
Exactly.
And if you give value, sometimes even free, like I would imagine you didn't charge the businesses that attended.
Yes.
You're giving free value. Actually, there's a brand loyalty that is built around that.
Yeah.
Okay.
Yeah. Then maybe just the other one to mention.
Yeah.
Is around the other support we give to our intermediaries around compliance.
Okay.
Yeah, compliance, a key issue is in insurance.
Okay.
So AAR being a financial institution, we have to comply with so many regulations, including our capital adequacy, ensuring that we have sufficient capital.
Yeah.
We ensure that the agents we deal with are licensed.
Yeah.
They are also compliant with other regulations like KRA. So then one of the things we've done as AAR to ensure that the people we work with are not penalized. Recently there was that KRA, they gave some room for people to declare taxes, which if you're not declared, I think there were some waivers.
Oh, yeah, the KRA waiver, yes.
Yes. So there was that tax amnesty, which ended last month.
Okay.
So we took an initiative to support some of our stakeholders in ensuring, from a finance perspective, to make sure that they file their returns.
They are compliant.
They are compliant, yes, with the regulation, and they are not unfairly penalized. Because remember, tax penalties are one of the biggest costs which impact small companies, particularly small companies.
Yeah.
You are struggling to survive out there in the market. Then the taxman comes with a...
this is how much you owe us.
Yes,
and sometimes the mistake is
then you close
because you are a small business, you don't even know how to file taxes sometimes. Okay. That makes a lot of sense. Thank you very much, Mr. Hosea, for making the time to have this conversation. I know we've pushed it a couple of times, but like you said, everything happens when it's supposed to happen.
Yes.
Maybe just a takeaway word for the guys who are watching and for anyone who'd be interested to be a customer, a shareholder, or a stakeholder at AAR.
So thank you very much, Sebastian, for the interview. So my take my parting shot is first to address generally all of us and all our customers, our suppliers, and other stakeholders that sustainability does not mean a cost. That's our belief as AAR, and also my personal belief. You can actually do business responsibly, and at the end of the day, it's a win-win situation for everybody. So we need to approach sustainability not from a cost perspective, but we focus more on the opportunities which will come out of these sustainability initiatives. My belief is that in future, sustainability will be a currency which you trade. If you are not, you've not embraced the principles of sustainability or the ESG, then it means it will become a cost to your business. Then to our customers, thank you very much for the support you've given us over the years. Without you, I think AAR would not be where we are now. Last year, we celebrated our 40th anniversary, courtesy of you. To our providers, our suppliers, thank you again very much for the support and trust you've had on us over the years. Our assurance is that we'll continue to support you, we'll continue to partner with you to ensure that your businesses thrive and that you are there for the long term. So asanteni sana, and may God bless you.
All right. Thank you very much for watching another episode of the Good Business Africa podcast. Make sure you come back each and every week because we're going to be having a new episode dropping. To Mr. Hosea, thank you very much for making the time. Us guys have the Good Business Summit happening in October, but we also have the Procurement Awards and Conference happening on the 1st of August. Come and check out what guys are doing to kind of integrate good business in the different facets of business. In case you're not subscribed, make sure you subscribe. I'm going to leave the link to AAR Insurance and maybe a contact person you can reach out to if you want to see the array of products that they have. But asante sana. See you in the next one.